Your file was not rejected because of who you are. It was rejected because of a bank clearance line nobody warned you about on a Tuesday in an email that took 11 words to undo 3 months of planning. That is the part of the Turkish citizenship story that almost no one puts in the brochure. The passport photo, the ceremony, the visa-free map, all of that gets the spotlight. But the thing that actually decides whether your file lives or dies sits much lower down, in the plumbing, where your money came from, how it arrived, whether the bank could trace it cleanly, and whether every piece of paper agrees with every other piece of paper. Get that wrong, and the strongest investment in the world will not save you. Picture the moment it goes wrong. You have wired the funds, you are proud, you have done the responsible thing. Then a message lands from the bank's compliance desk. It does not say, "You are rejected." It says something colder and more bureaucratic. "We are unable to complete the source of funds verification with the documentation provided. Please submit additional evidence. No deadline you can trust, no name to call." And every day that letter sits unanswered, your file sits with it, not moving, not dead, just frozen. That freeze is the real enemy, not a dramatic no, a quiet, indefinite not yet. In this video, I'm going to show you the concrete failures that get a Turkish citizenship file rejected or stalled, stated as rules, not as horror stories, so that you can build your file to survive the part of the process that is actually hard. We will walk through the bank clearance, the source of funds trail, the documents that must line up, the valuation trap, and the honest caveat that most advisors quietly skip because it makes their pitch harder to sell. Stay to the end, because the last rule is the one that separates a file that clears from a file that drifts for a year. And I promise you this, every figure I mention that can move, I will flag as something you must reconfirm before you build a plan on it. If this is your first time here in Berktüzel. For the past 8 years, I've helped entrepreneurs and investors plan their international structures. I'm also the founder of Corpenza. So why does the bank matter more than the investment itself? Because in every serious citizenship by investment framework, the government is not really auditing your money, it is trusting a licensed bank to do that first. The bank is the gate. Regulators around the world have pushed anti-money laundering rules onto financial institutions so aggressively that the bank now carries the legal risk if it lets a questionable transfer through, which means the person deciding your fate is not a smiling official who wants to welcome you. It is a compliance officer whose entire job is to protect the bank from you. Once you understand that, everything about how you prepare your file changes. You are not writing a love letter, you are building an evidence file for a skeptical auditor. And Turkey, as a destination, is worth building that file well for. It is one of the few places offering a real functioning route that pairs a strategic location with a genuine economy. That is exactly why it takes the gate seriously. Let me give you the process the way it actually happens in order, because most people imagine it in the wrong sequence. First comes the tax number and the bank account. Before a single lira moves, you need a Turkish tax identification number, and you need a local bank account opened in your name. This sounds trivial. It is where a surprising number of files stumble because the account opening itself triggers the first round of source of funds questions. The bank wants to know who you are before it will hold your money. If your answers here are thin or inconsistent, you have already planted the seed of a later rejection. Rule 1. Treat the account opening as the first exam, not as paperwork. Second comes the transfer, and this is the rule almost everyone underestimates. The money must arrive through the banking system in a way that is fully traceable from a source that is clearly, documentably yours. A transfer that appears out of a third party's account, or arrives as a lump with no visible history, or crosses through an intermediary that the bank cannot see behind, that is the classic freeze trigger. The compliance desk does not need proof that you did something wrong. It only needs an absence of proof that you did everything right. In their world, unexplained equals unacceptable. Rule 2. An untraceable transfer is treated as a guilty transfer. Third comes the source of funds evidence, and here is where files quietly die. It is not enough to have the money. You must be able to show where it was born. If the funds came from selling a company, you need the sale agreement and the proof of payment into your account. If they came from salary and savings, You need years of statements and income records that add up to the amount. If they came from an inheritance or a gift, you need the legal documents that establish that chain. The failure pattern is almost never, this person is a criminal. It is this person cannot document a clean line from origin to arrival. A gap of even a single link in that chain can stall the whole thing. Rule 3. You are not proving you have money, you are proving the money has a lawful history. Fourth comes the property and its valuation, if you are going the real estate route. The investment has to meet a minimum threshold, and it has to be independently valued to confirm it genuinely meets that threshold. Here is the trap. People assume the price they paid is the number that counts. What counts is the appraised value that an authorized valuation report assigns. If the appraisal comes in below the required floor because the purchase price was inflated or the property was simply overpriced, your file can be rejected on a technicality even though you spent the full amount. You paid the money and still missed the bar because the valuation, not the receipt, is the measure. Rule 4. The appraisal is the real threshold, not the sticker price. Now let me be honest about the numbers, because this is where I refuse to do what the glossy pitches do. There is a minimum investment amount, and there is a holding period during which you cannot sell the qualifying asset. Both of those figures have moved in the past, and both can move again. Governments adjust thresholds and conditions as programs evolve, and that is normal and healthy. So I am not going to state a hard number and let you build a plan on a figure that might be stale by the time you act. Treat the minimum and the holding period as things you reconfirm at the source in the current official rules before you commit a single unit of currency. Anyone who quotes you a precise, confident, unqualified number and does not tell you to reconfirm it is selling you certainty they do not actually have. That habit, quoting a moving number as if it were carved in stone, is itself one of the reasons files fail, because people plan against yesterday's rule. Fifth, and this is the rule that ties the others together, consistency across every document. Your name must be spelled identically on your passport, your tax registration, your bank records, your title deed, and your application. Your address, your marital status, your stated source of wealth, all of it must agree. Compliance systems flag contradictions automatically. A name transliterated two different ways from a non-Latin alphabet, a mismatched date, a company listed under one spelling here and another spelling there, any of these can throw your file into manual review, and manual review is where weeks become months. Rule 5. Contradictions do not have to be lies to be fatal. The system does not distinguish between deception and sloppiness. It only sees a mismatch. Here is the honest caveat that most advisors skip, and it is the whole reason this channel exists. Everyone tells you about the destination. Almost no one tells you about the aftermath. Getting the passport does not by itself change where you owe tax. This is the single most expensive misunderstanding I watch investors carry into these programs. Your tax position is not decided by which card is in your pocket. It is decided by where you actually live, where you genuinely run your life and your business, and how your structure is arranged. A second citizenship is an option, a powerful one, but it is not a switch that turns off your obligations in your country of residence. If you acquire the citizenship and keep living and operating exactly as before, anywhere outside the boundaries you imagine you have escaped, your tax reality can be completely unchanged. The passport is the arm. The route, residence, real activity, and a correct structure is what determines the tax and legal outcome. Anyone who sells you the card as if it were the whole package is selling you the most expensive half of the story. That is the thesis of everything I do. It is not your passport, it is your structure. Citizenship, tax residence, company, and banking are one connected package. Pull one piece out and wave it around on its own, and it does very little. Assemble them deliberately and you have something real, not an escape, but an expansion, a root that stays firmly planted, and arms that reach into the world. So here is what I recommend. Before you fall in love with the destination, build the boring part first. Map your source of funds as a clean, documented chain from origin to arrival, and stress test it as if a skeptical auditor were reading it, because one is. Confirm the current minimum and holding period from the official rules on the day you act, not from a brochure written last year. Line up every document so the spellings, dates, and details agree across all of them before anything is submitted. Get an independent read on the property valuation before you buy, not after. And treat the passport as one component of a whole structure planned alongside your residence, your company, and your banking, never as a solo purchase that fixes everything. Do it in that order, and the bank clearance stops being the moment your plan dies and becomes the moment it is confirmed. If you want that whole package planned as one connected structure rather than a scattered set of purchases, that is exactly the work we do at Corpenza. The goal is never to sell you a document. The goal is to make sure the document sits on top of a structure that actually holds. That's it for this one. I hope to see you in other videos. Take care.